Hello, Assalamu alaikum audience. Hope everyone is fine. Your instructor Abdul Rafi here for accounting and mathematics. So today we have got one of the recent questions of paper 2022 accounting 9706 AS accounting paper 2 variant 1. So let's talk about the partnership question for 15 marks that we are going to solve. It says that there is Maria and Rio. They have been in partnership for a number of years. They are considering admitting a new partner that is going to be Sarah. Okay, we'll talk about that. So the first thing is we have to state 3 disadvantages, the theory part, to the existing partners when a new partner is admitted. So you need to understand that when a new partner is admitted, definitely he or she brings a lot of more capital. So you have a lot of more resources and funds available. Secondly, the person might have expertise in relevant department. So क्या पता कि वो sales में बेहतर हो, human resource में, marketing में. So that's why a lot of expertise the new partner brings in. Similarly, more capital is available. These are the advantages, the positive side. But if we talk about the drawbacks, the disadvantages, we need to understand that if a new partner is admitted, the main thing is that profits are going to be shared. So that is the main problem, that profits are going to be shared. So profits are shared. You can write like this: profits are shared with the new partner. Similarly, the other main important, the more people that comes in partnership, that's a common issue. You need to understand that there are risk of the disagreements. There is risk of disputes, disagreements. So one partner not agreeing with the other. So risk of disputes and disagreements are possible. Okay. So this is another concern here, the risk of disputes and disagreements. The other disadvantage we can have, let's say there will be decision making. There can be poor decision making and the decisions being delayed, late decisions हो रहे हैं, and similarly disagreements की वजह से, so maybe the business might be affected effectively and productive capacity being lost. So poor decision making can result, and we can also say that there is always the unlimited liability. So due to one partner being not efficient, the other partners might have to suffer. So poor decision making can also be possible. That's what you have to write in this for 3 marks, the theory. Okay, moving forward, the main part is the numerics part. So if we move forward, we have to read the information first that says the partnership year end is 31st December. That is very important. So partnership is ending on 31st December, which means it starts on the financial year starts on 1st January and ends on 31st December. For the period 1st January to 30th September 2021, Maria and Rio did not have a partnership agreement. That is very alarming. When you don't have a partnership agreement, which means that from 1st January to 30th September, we can say that these are 9 months: January, February, March, April, May, June, July, August, September, October, November. So we have this till September here, which means that till the first 9 months of the year, they don't have a partnership agreement, which indicates the following clauses that we need to understand, that they will be in the partnership agreement absence. If you don't have partnership agreement, there will be the Partnership Act of 1890 that will follow, which indicates there will be no interest on capital, no interest on drawings, there will be no salary, bonus, commission paid to partners. It will be simple, no partner will be dominant, which means that equal profit will be shared, equal loss will be distributed, and if any partner have given a loan to the business, he will be getting 5% of the interest on that. Okay, so this is very important. If any partner give the loan to the business, to the partnership, it will be he or she will be paid 5% on it. So these are the clauses, students, that you need to understand for the absence of partnership agreement. Coming back to the question, we need to understand that we have been given the capital accounts of the following information is available. So we have capital accounts of Maria. Let's highlight that as well. We have Maria 52,000, Rio 38,000, and loan account of Rio, which means Rio have given a loan of $6,000 to the partnership. So these are the capital accounts on 1st October, which means in the 10th month they admitted Sarah as a partner. So they are admitting Sarah as a partner as well. Sarah is introducing capital of $45,000 from her personal savings, and the partners agreed to make no adjustment. So there is no goodwill here, no revaluation here. Okay, and then from 1st October, it's going to be a formal partnership agreement. Similar type of question you can see in Tom and Jerry, that that comes in 2016 as well. Make sure you practice that. And after a long gap, the examiner again tested the absence of partnership agreement to ensure that students know this concept or not. So we need to understand that Rio is to be given interest on loan at 8% per annum. So now he's going to get 8%. Interest is 6% on fixed capital. So interest on capital now will be 6%. Salary is 15,000 per annum. And now the profit sharing ratio, loss sharing ratio is 2:1:2. So Maria gets 2, Rio gets 1, and Sarah gets 2:2 ratio for their profits to be distributed. So let's get started. We need to understand that we have to prepare the appropriation account that is going to be of 7 marks, okay? For Maria, Rio, and Sarah, they have already done help for us. They have distributed like 9 months together and 3 months onwards, okay? So this is 9 months appropriation account, and this is going to be 3 months appropriation account, students. Apart from that, we need to understand that here we also have this thing that is basically the partnership made a profit before taking into account interest on Rio's loan. So they have already mentioned, to make it very clear and easy, the examiner is trying to help you because he wants to check your concept on partnership agreement. So कोई भी अभी interest charge नहीं है that we have to charge, and there's a profit of 82,500 already that is going to be accrued evenly throughout there, which means that each month the revenue is same, the profit is same, okay? Each month we are getting the revenue same. So let's start working on it. So let's say we'll be saying that it will be profit before interest, and profit before interest we can say that. So the first thing will be the profit before interest, and let's make sure everyone have a calculator here to solve this. It is going to be 82,500 divided by 12. So you got the per month profit, that is going to be $6,875, okay? So it's going to be 6,875. You multiply 6,875 by 9, so you got 61,875, and then you multiply 6,875 by 3, because October, November, December are 3 months, you got 2625, okay, students? Now the main thing is where the main marks lies, that is the less the loan interest, okay? So you need to understand that you have to do loan interest here, subtract the loan interest that Rio is providing. So coming back to the question, we need to understand that it's 6,000 is the loan. So let's say here that this will be coming out as 6,000 into the 5% because of partnership absence in the first 9 months from 1st January to 30th September, times basically 9/12 to get that portion, okay? So it's going to come out, if you use calculator, $225, okay? So here you go, $225 you have to subtract, and here if you talk about, it will be, let's do it here, that let's make the working number 1 here. So working number 1, I have done it here. It will be 6,000 into the percentage that is given by the examiner, that is 8% for loan, and you multiply by 3/12, that is 25% of it, okay? So 8% into 25%, we got that as $120. So this is coming the loan interest at that point, okay? Less loan interest. So you got the profit now. Let's write down the profit, students. So here you got after profit before interest and after subtracting the loan interest, you are going to get the appropriation profit. So you can say that it's going to come out as profit for the year, okay? So we got profit for the year in 2 parts. That's going to come as 61,875 minus 225. That makes it 61650. And this one should be 2625 minus 120. It comes out as 2505, okay? We need to understand, everyone, hope everyone is clear up till now. Make sure you're following, copying, and as well as solving together, okay? Moving forward, we need to understand that we have to make appropriation account, and in that we are going to say that appropriation account, it's starting here, and in appropriation account, the first thing is add interest on drawings. So you add interest on drawings from the perspective of the business, it's an income, but the partner have to pay the interest on drawings. But because there is no such clause there, the drawings bhi nahi hai, and there is no interest on drawings clause as well, statement there. So we'll just quickly jump on to basically the interest on capital that we subtract, okay? So it's going to be less interest on capital, that is going to be for the 3 partners. Okay, students, so let's write down the names of the partners, that is Maria and Rio and Sarah. We need to understand that because the first 9 months of the partnership, there was no partnership agreement, there was absence of partnership agreement, so there'll be no interest on capital provided them. We need to understand that interest on capital is basically to encourage partners to put in more capital, so they get the benefit, they get more interest on it, so they get more income for them. But for the 3 months, that is when the partnership agreement was formed, we are giving them 6% per annum on the fixed capital. So here there are 52,000 for Maria, so let's write it down, 52,000 into basically the 6%, and then only for the 3 months, that is 3 upon 12. Similarly, here will be the other one is Rio, 38,000 is the capital for her, so 38,000 into the 6% students, and again 3 upon 12. And Sarah is bringing in her personal savings as capital, so we can say 45,000 is the bringing capital. So 45,000 into 6% into the 3 upon 12. So let's try to work it out in the calculator, all values that we are going to get. So this is coming out, the first one is coming out as 780. So 780 interest on capital will be received by Maria. Then we have 38,000 into 6% into 3 upon 12. That is basically 570 interest on capital Rio will receive, and Sarah will receive 45,000 into 6% into 25%. That is $675. Sarah will receive as well, because this is the business going to pay, the partnership is going to pay to them, that's why it's being deducted here, but this is an income for the partner. Then you also have salary for one of the partners, so we have to deduct salary as well. So salary is going to be for Rio only, I think. So we need to understand that in the absence of partnership agreement, as we discussed, there are no salary, no interest on capital drawings. That's why the first 9 months is easy to do, okay? But then you have 15,000 salary per annum that needs to be given to Rio. So we are going to say that it's going to be 15,000 into the 25% or 1 upon 4, that is 3 upon 12. So you can simply say that it's going to be only 3750 of the salary for the 3 months, okay? So here you go, 3750 salary. After that, there is no commission, nothing, students. So you can simply just finish off these two and you get the residual profit, okay? So we can simply say that this is going to be the residual profit, the leftover profit, the remaining profit that will be distributed between the partners. So here it comes as 61,650, and there it comes as subtracting 780, 570, 675 and 3750, you should be getting it as 14,730. okay, let's try again, that 20,505 and minus 780 minus 570 minus 675 minus 3750, you got that as 14,730. So this is the residual profit, and now we need to do is basically divide the profit between the partners. So we can simply say that in the 9 months of the business, there was only Maria and Rio, so we can say this is the share of profit now between them. So share of profit between the partners, and it's going to be for Maria, that is going to be, and Rio and Sarah. Because the first 9 months Sarah was not admitted, so Sarah is not liable to get the benefit for the 9 months, okay? And we need to understand that it's going to be very simple, because when there is absence of partnership agreement, profit and losses are shared half equally. So whatever the profit is, 61,650, that will be shared equally between Maria and Rao. That is coming out as 3825, okay? So this will be for the 9 months, 3825 and 3825, and Sarah will not receive here. And then you have the ratio of 2:1:2 for the 3 months ending. So you say that it will be, we'll do for that, and also I'll give the writing here, 61650 into 50%. Make sure all workings are, and 61650 into 50%. The other one will be, let's do it here, that's going to be said that it's going to be 14,730 into 2 upon 5, and then 14,730 for Rio, it's going to be 1 upon 5, and then 14,730 into 2 upon 5 for Sarah as well, okay? Because 2:1:2 is the ratio. Make sure you write down the name respectively in the order. So let's work it out, what's going to come the value. It's coming as 5892 for Maria and Sarah 5892, and for Ria it's going to be the 1 upon 5 only, and that is going to be 2946. Okay, so this is how the profit is distributed. I'll repeat the point for you guys students, that we need to understand that there was absence of partnership agreement, so no partner is dominant to the other partner. They will invest the same and they will get the profit and loss in the same ratio, that is half and half, that is the equal. They will get the same amount equally divided. But then when Sarah is admitted for the 3 months, like onward 3 months onwards till the next years, that is how you do it, and that is going to be your final amount balance, that is nil account. Okay, so you have milled it, and that is how the appropriation account will be made, and it's correct as well with in correspondence with the marking scheme. Let's try to also do one more part, that will be and give us all 15 marks for this question. That we need to understand, before Sarah had been admitted as a partner, she had been earning a salary of 18,000 per annum. So she was earning a salary of 18,000 per annum. She had also received interest of 8% per annum on her personal savings. Now we have to compare Sarah's income as a partner with the total income she would have otherwise receive in the 3 months ended 31st December 2021. We have to support your answer with calculations as well. So we need to understand that this part C is very important, and we have to solve it in 2 steps. So let's say that before partnership, and we call that here, that is basically after partnership. Okay, so before partnership and after partnership, what is going to happen? Okay, we need to understand that before partnership Sarah was getting salary of 18,000 per annum. So we can say that it will be 18,000 into 25% only, because of the 3 months. Okay, 3 months basically 1 quarter. Okay, so 18,000 into 25%, that is 4,500 the salary before, and then also receiving the interest on that. So we can say that 45,000 was her savings, personal savings. It's written there now, and personal savings is mentioned. So you have to make sure you have the complete knowledge of the question. So 45,000, if she don't invest, she get 8% on that, and again 25% of that due to the, or you can also say 1 upon 4 or 3 upon 12 as well. Doesn't matter students, just mathematics here. So 45,000 into 8% into 25%, we got that as $900 as well. So we are going to say that total going to be 4,500 plus $900. That makes it around I think $5,400 with the help of calculator. And now if you talk about her after partnership, what she is getting, so we can definitely say the income, total income here is going to be, the total income here we can write in green, so we can take the points from here only. Sarah is getting 5,892 the profit, $5,892 as profit, and Sarah will also receive the interest on capital of 675, right? So here you go, you write down that she gets the interest on capital here. Okay, so interest on capital is coming out as the $675, and then you have the share of profit after working, so you got the share of profit as well. That is basically coming out as, share of profit for Sarah comes out as 5,892 if we copy down things from the previous. So we can definitely say total for Sarah is coming 5,892 plus 675, so that turns out as 6,567. So how much is the excess amount? We have to compare what will be the amount and support your answer with calculations, which means I think we can clearly say that there is more benefit for Sarah. There is more benefit for Sarah if she do the partnership, if she join the partnership, as compared to doing her separately, like earning salary before working somewhere else and getting the personal savings. And the difference, we can just quote it down, that the difference is basically difference in income that she is earning is, that will be 6,567 minus 5,400, and that is coming out students as, so she's earning more, that is $1,167, $1,167 is the increase in her income. That's a good amount, so she should switch and be a partner. There are more I think there are drawbacks as well, the non-financial factors. So that will be need to consider, but we have to give more calculations here. So I think this will also work very easily, and that is how you solve the complete 15-mark question. Hope everyone got this recent paper question. Thank you, students.